All right, I'm really excited about this next panel. We had mentioned this morning in the 10 trends, this phenomenon of oceans of capital flooding into mobility and some of that ebbing out more recently. So we're going to now talk about mobility finance, and it is my great pleasure to introduce Patrick Steinemann. Patrick is a managing director and head of the Global Mobility Group at Bank of America. Patrick, we met, 23 years ago in Switzerland. He's been just a remarkable person to know and a friend. Patrick received his PhD in engineering systems here at MIT from Professor Dan Roos, who is still here in the room, back in the year 2000. He's been with Merrill Lynch, Goldman Sachs. He founded his own firm. He's lived in Hong Kong, London, all over the place. He's now in San Francisco. Patrick, tell us a little bit about what's going on in finance.
Thank you, John. It's great to be back here in Boston with MIT and particularly honored to see Professor Dan Roos in the audience. I will speak about 2 points. One, how much money do we need for all of this mobility transition? How much is needed? And second, where does the money come from? And 2 simple points. At Bank of America, we have decided mobility is such a big topic that we created a group around it to provide solutions to companies, helping to fundraise, helping companies to find the money, and that's what we're doing. But I'll speak here, with a global perspective and from a private sector perspective, obviously. Let me, however, clarify that I'll use the words private and public slightly differently. So we're not talking about public finance, but I will use, in a capital market sense, private markets being private equity, venture capital, public markets being publicly listed companies on the stock exchange. So if we go onto the first page here, and how much is needed to support the transition of mobility, not only the ongoing financing of the transportation industry, but actually the transition. It's massive amounts of money. We know that. There's multiple reports published. Some estimates here on this page. Building the retooling of factories for EV production alone is multiple billions of dollars. One retooling factory might cost $1 billion. A new factory, like many of the startup EV companies are building it, is easily $3, $4, $5 billion. That adds up to $500 billion of investment needs over the next decade. If we look at battery factories, 50 gigawatt hour is a large gigafactory. That costs about $3 to $5 billion. Mujib was telling us the numbers. In the US, more like $5 billion. That powers about 500,000 vehicles. We have 80 million vehicles, new car sales in the world. So multiply that by 150, that's about another $500 billion to $1 trillion for all of the gigafactories that would be needed to power all of the new car sales with batteries. And the amounts are equally large when we talk about mobility solutions, systems, platforms, the likes of ride-hailing, software platforms, autonomous driving, and so on and so forth. So in total, the amounts are large, but can be quantified to be certainly exceeding $1 trillion, most likely in the order of $2 to $3 trillion. And that's for the transition that we're going through in this coming decade. And you can look back and say, does that stack up what we spent over the last few years? And I'll come to that in a minute. If you go to the next page, how is the mobility sector financed? It's technology intensive. So we do have a lot of companies that develop new systems, new products, new technologies that need to be piloted, tested, verified, scaled, and then brought into the commercialization space. That is a typical developmental arrow for companies with new technologies, and that's exactly what we see in the mobility sector. But the scaling is really large. Most of the money is needed in the last 2 steps over there. Going to commercialization and scaling up for the massive scales that we have only in this country, but on a global scale, that's where massive amounts of money are needed. So the difficulty most of the time with companies and technologies that we talk about here is not so much in the far left side at the seed stage to find financing, but actually is in the last two steps. How to scale up from proven technology into viable commercial systems into full-scale production. And that goes for batteries, that goes for platforms, for user apps, and lots of things. Now, how is the finance world reacting to that? A lot of the financing has to be equity, especially on the first three steps. It has to be equity financed. And debt financing really only comes in once those revenues come in, once the business potentially turns profitable, and that's in the last two, or if not last step. Is that what we see in practice? In the next page, a couple of observations where the money actually has come from. And we see here over the last 4 years, this is very detailed statistics behind it on a global scale. We've added up all of the fundraisings that have occurred in the mobility sector. And we do see that over the last 4 years, about $500 billion has been invested. So fairly large amounts. And we could go further back, but the numbers become smaller and smaller and probably start somewhere at the IPO of Tesla some more than 10 years ago. Now, approximately half of the money here, 40–50%, are invested at the VC early stage and invested as equity indeed. We then see fairly large amounts in the middle columns, the middle columns there being raised through IPO. And that was mainly in the last 2 years, except for this year where the IPO market really has dried up. And so far there hasn't been much. And we'll see how that goes forward. And we see the remainder of the top colors there being publicly listed companies raising further money, equity, and debt. So indeed, we see that a large part of this sector development has been pure equity capital invested, and that large companies that need to transition can afford to utilize debt as a financing method. But that is for those who are already large and transitioning, and many of the startups and scale-ups need to go through this entire arrow of capital development. So are we on track to fill the gap that's needed? Yes, but a lot more is needed. And on the panel, we have, I think, a representative from each one of the capital sectors, or many of them, and can go into further detail. It's definitely a big challenge, a lot of money needed. A track record is there to show the development is viable and is on track, but a lot more needs to be done. Thank you.
Excellent. Okay.